bombs. So the argument that gold has value because you can make jewelry and electronics out of it, contrasted with Bitcoin has no value because it's only numbers on a screen, I think it's intellectually dishonest. Or perhaps it's that they just don't understand the power of Bitcoin.
What it is what we call the base layer of demand. So if you're a commodities producer, and look, commodities are not popular, so I understand a lot of people don't understand this line of business, but if you're a commodities producer, what you're looking for to even get involved in the business is called a base layer of demand. So that base layer of demand can come from wherever it needs to come from, but it needs to be confirmed first. Because before anybody is going to invest any type of money in any type of production at all, they're going to be projecting out 3, 5, 10, 20, 50 years of production costs and projections. And they want to know that this is a sustainable business that is going to return a return on investment. And the only way to know that for sure is if there's a base layer of demand. So once you have a base layer of demand that you know is going to be consistent, now you can start to go to the process. But before I hop into that, you made so many good points, and I'm trying to remember in my head, I want to talk about this. I want to talk about this. But the first thing is the trust. So yeah, absolutely. You're spot on with the trust. The way I say it is like this, because a lot of people don't understand. Well, what do you mean you don't trust? Well, hold on a second. Nodes trust nobody so that everybody can trust anybody. So it's not like that within the network, everybody is just blindly saying everything works great, everything is fine. No, there are a core group of people who run their Bitcoin nodes who want to be able to verify their Bitcoin for themselves that trust nobody. They don't trust anybody. They don't take anybody's word for it whatsoever. I don't care if Coinbase said they sent me that withdrawal. I don't care if this person did that. I want to see it on my node. I want to call that transaction on I want to see how much Bitcoin I have on my node, because they trust nobody. But because there's a core network of nodes that trust nobody, that allows everybody else to trust anybody else who's using the network. So yeah, trust is that core critical component, but it's not trustless at heart. It wasn't built trustless. It's the way the incentives work within the system where the nodes don't trust anybody that affords the trust for everybody else. So he definitely ignores that point of the nodes, right? Because the nodes are like he wants to put gold on the blockchain. It's unbelievable. I've seen him be against crypto and blockchain. Now all of a sudden he's like, well, gold on the blockchain. It's like, what is going on with you, man? But the point is you still have to trust those people. Well, the nodes trusting nobody so that everybody can trust anybody replaces that trust mechanism in the real world and places it for Bitcoin. So now that we know that we don't have to trust anybody, now we can get back to this base layer of demand thing. And that base layer of demand is critical. It's critical for gold. It's critical for silver or any other commodity, even Bitcoin in the world. Because when you have that base layer of demand, when you know supply is moving against that base layer of demand, but that base layer of demand isn't going to move, now you can make better projections, right? Because the supply demand equilibrium is going to be more accurate when there's only one piece of that curve that's moving. And demand can slowly grow for Bitcoin. Bitcoin it has a base layer of demand, but that base layer of demand is growing faster than the internet grew. So that's why we're seeing such heavy price movements, because the supply is fixed. The inflation rate continues to drop. So supply is dropping against a growing demand. The price is going up. Plus the currency that we're valuing it is being inflated to hell. So it's a double positive price pressure. And that's why you see this huge price movements, because it's the free market. And that's just how prices are discovered in the free market. Price discovery is so misunderstood. It's one of those, it's just like inflation or the difference between currency and money. You say price discovery and people are like, what the hell are you talking about? The price is the price. It's like people don't take an extra second to just figure out, how does an entrepreneur come to pick that price? Do they just throw a dart and say, all right, $4.99, here we go? No, there's a cost of production involved. And with gold, I want to do it with gold because it easily translates to Bitcoin. It's what's called the all-in sustaining cost. It's what's called the cost of production. And let's say it costs like $1,800 to produce an ounce of gold. Well, if the price of gold just started selling off and started to go below $1,800 per ounce, producers would not be able to produce anymore, because it would be costing them more to produce an ounce of gold than they could sell it on the marketplace. So producers, they go out of business. They fail. And when producers go out of business and fail, that means they're not delivering supply to the market. So the base layer of demand is there, but the supply is dropping. And the free market price discovery, supply demand equilibrium pushes the price back up because the supply is dropping against the demand. And as the price goes back up above the cost of production, well, then producers will then come back into the marketplace because they know that they can produce gold and make a profit. So the reason that gold has stored value for thousands and thousands of years is because it requires proof of work. It's because it requires an all-in sustaining cost to pulling that gold out of the ground and bringing it to the marketplace. And that's how producer economics protect the value of gold over thousands of years, because it doesn't matter what currency is being used, what the reserve currency of the world is. It doesn't matter if it's Roman silver or Egyptian gold. It doesn't matter. What matters is how much of a cost is there to pull it out of the ground and increase the supply, right? That's the function that protects the purchasing power of gold. Well, it's the same thing with Bitcoin. And this is the most important thing. This is the most important message I have to say. And when I did say it, a lot of people came back to me and said, where can I learn about this? Where did you hear about this? Is this your idea? Well, no, it's not my idea. Satoshi told us this. This is a Satoshi quote. I put it up on my Twitter. I don't know it by heart, but basically what he's saying is that in a commodity cycle, the cost of production is always going to generate, the price of the commodity is always going to trend towards the cost of production. But with the difficulty adjustment, as production increases, the cost of production goes up, pushing the price of Bitcoin towards the cost of production. So it was strategically designed to store value, not just through fiat hyperinflation, but long after all of the fiat currencies are long gone, because it's a function of energy input. So when fiat currencies are gone, it's going to be Bitcoin energy value. It's going to have nothing to do with the cost of how many dollars it costs to produce a Bitcoin. It's going to, how much energy is it going to take to produce this Bitcoin? And the baseline will become energy rather than dollars, because Bitcoin is commoditized energy in the form of money.
That energy is not a flaw, it's a feature.
Absolutely. And people need to understand that the creator of Bitcoin leveraged his understanding of producer economics and the commodity cycle to make Bitcoin a strategically designed asset to store value through space and time. And there is no other financial instrument in the world that was created to do this. And Bitcoin is not only the first one created to do it, but it's the first one to do it successfully.